Hello everyone, and welcome to this presentation on how to squeeze more profits out of your trades. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you unfamiliar with Specialist Trading, we are first and foremost an educational website. If you come to my presentations every week, you'll see that each week I try to give you something to increase your odds for success with trading, something that I've accumulated in my 38 years of trading. I started out on the floor of the Pacific Stock Exchange, and I was on the floor for a total of 16 years, and 9 of them I was a specialist for DLJ. I traded through the crash of 1987 and the bull market that followed, so I know what works in terms of consistency and what doesn't. And most of what traders are using are faulty methods, things that don't have any consistency to them. So the good news is I give you usually one or two things each presentation that I do on a weekly basis. And today I'm going to give you a great technique for stretching out your gains that you can apply to any other your strategies, any technique that you're currently using. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we are required to show you our disclaimer. So as you are taking a moment to view it, I would also like to mention there are a lot of new viewers today, a lot of new attendees, so I would like to invite each and every one of you to get some more information, some more knowledge about what we do and what we teach by following us on Twitter. You may want to write our name down there, our handle, that's at SPCLSTTRADG, abbreviation for Specialist Trading. We post daily information on our Twitter page, anywhere from signals that are strategies generated to little bits of wisdom, trading wisdom along the way. So there's lots of ways to get some very short but brief and knowledgeable information on Twitter. If you'd like to get a more detailed type of knowledge or some more basis of what we do, well, you can follow us on Facebook. Our sister website, which is Pro Trader Strategies, has put together a Facebook page for us, and there's a lot more detailed information, a lot of videos, more things about option trading, a lot more things about what we do and different lessons. So different ways in which to get information and which to follow us as well with all the knowledge that we offer our students and our members. Now, as I stated, I started on the floor of the stock exchange, and so I've seen just about everything. I know techniques, every method, indicators, systems. I know what works in terms of consistency, and I know what doesn't. So what I want to do is, my goal is to teach you. As you see here, I want to teach you how to trade with a specialist edge. You notice that I didn't write down I want to trade for you, as so many other websites do, where they tell you where to buy, where to sell, what to buy, what to sell, what market to trade, what time frame. We don't believe in that. Our philosophy is everyone should pick their own way. And what we do is we offer you the information and the knowledge that has stood the test of time, and then we mold it to fit your needs. So even though we provide our members with strategies that generate signals, everyone can trade them differently. Some may want to trade them conservatively, other traders may want to trade them aggressively. We can have two traders trading the same signal and come up with entirely different results. That's because mainly you are becoming a process and you are deciding for yourself how you want to trade. It's our opinion that this is the only way you will get onto that road to consistency, not by following what someone else tells you to do or what they are doing, but by simply following your own process and taking your own responsibility in for your own signals and your own trading. So as you see here, my goal is to teach you, not to trade for you with the specialist edge. This is the same edge that was taught to me many years ago, and this is what I'm teaching to all of my students and members. So as you see today, I have a great technique to share with you today, and that is how to extend your gains. Now, I want to start out by asking you a question, but before we go into it, once again, since this is a question, and we're conducting this as if it were a classroom, if you have any questions, kindly wait till the very end to ask any questions. That way the presentation will run smoother. I have a lot of examples and a lot of things to teach you today, so I want it to run as smoothly as possible. The question I will answer is this being recorded? Yes, this is. So you can go to Pro Trader Strategies and just simply contact them, and they will provide you with a link to this recording. All right, so if you have any questions, just wait till the end, and we will start with the presentation right now. With this question, I want to ask you, has this ever happened to you before? I can almost guarantee that it has. But let's look at this chart here. in ADM. All right, as we look back, this is an older chart, but this is just for educational purposes. As we see here, a buy signal was generated, and this was actually one of our signals generated, this buy signal right here, okay, where this green up arrow is. So if you're in the trade, pretty much going sideways, nothing is really happening, and then it decides to go up a little bit, and you use the standard exit that our strategies provide, and you gain about a point out of this trade. Nothing great, but you got out with a nice gain. You were in the trade a little bit longer than you would have liked, but you exit with a point, and then lo and behold, the thing goes straight up after you get out, right? Now this works on the same side if you're selling. Here's another chart here with another actual signal that was generated by one of our strategies to go short. Now, this one fared a little bit better. Had you gone short here, you would have gained about anywhere from 2 to 4 points using our standard exit if you just wanted to use the basic format. All right, so let's say you did that. You get out with a nice 2 to 3 points, and then the market falls out of bed a week or so later. All right, look familiar to anyone. So this is a common problem which happens once traders start to become consistent. They start to get a little, more confident in their trading, and then they start to see that, boy, I'm leaving a lot on the table. So we have to ask ourselves, how can we squeeze more profits out of every trade? Are there techniques that would allow us to stay in a little bit longer when we have these trades that really, generate these long trends? Well, yes, there is. Here's an exiting technique that I learned some 30 years ago on the floor of the exchange, and I want to share with you today. And it's totally free. You can start using this as early as today if you like. And all it uses is a standard indicator that you can find on just about any charting software package, and that's the RSI tool. And all we're doing is we're changing it from the standard setting to read 14 periods to read 5. So we're changing it to read a 5-period RSI. Okay, if you're having difficulty doing this, just go to your edit box and you'll usually see a 14 length or the 14 period. That just means that the indicator will look back 14 bars to come up with its calculations. We just want to change that to read only looking back 5 bars. It doesn't matter if these are daily charts you're looking at. It doesn't matter if you're looking at tick charts. I'm going to show you a number of examples in all different time frames and markets, but we just want to set it to 5. If you have difficulty with it, contact your tech support or whatever charting software you're using, and they should be able to help you with that very simply. Okay? So here is the technique. We're going to go step by step so that you can start learning this. Now, remember, I said you can start using this as early as today if you like, but I would appreciate it if you please paper trade it first so that you really understand the process. We don't just want you jumping in feet first. So many of our students do this with all of our numerous techniques and methods, and they inevitably lose money right off the bat, and they don't understand why. It's because they haven't really fully grasped the concept of the tool yet. So they don't really understand how to apply it, even though they think they do. So the best way to do this is through paper trading. I'm going to teach you how to apply it, but please paper trade it until you really fully understand how to apply it. All right, so let's look back at the charts again, but this time we've applied the 5-period RSI, as you see on the bottom of the chart. The RSI is simply this blue line right here. And we want to use the thresholds, the standard thresholds of 70, that's the upper threshold, and the lower threshold of 30. And that's it. That's all you need to know. But you just need to follow this. And once you get into the trade, what you want to do is follow the RSI. In this case, it's a blue line. And we want to see that once it crosses above the 70, this is if we're long, we want to just monitor it tick by tick. All right, so it's above the 70. The next bar, it still remains above 70. The next bar, it goes higher, it's still above 70, and so on. We continue to track it until the first bar closes, not intra-bar, but it must close below 70. All right, it doesn't matter if this is a 5-minute bar or, as we see here in this case, a daily bar. But we want to see that that RSI goes above 70, and the first close where the day ends or the bar closes and the RSI is below 70, well, that's our corresponding bar there. That's where we put our stop, just below that bar. Remember, this is if we're long. We're going to reverse these if we're short, but we're only looking at a buy setup here. And so a number of our students, this is where you become a part of the process and everyone trades differently. Some students will put their stop maybe 1 or 2 ticks below. Others will put it a full point below. This is entirely up to you. Remember, we do not teach or trade systems that require everyone to trade the same exact way. We don't believe in that. We want you to become a process and trade your own style that meets your needs. So In this case, you can put it down roughly about a half a point. The only suggestion we would make is that for higher price stocks where there's more volatility and more movement, you may want to spread it out just a little bit more. All right, so we place our stop just below that bar, and we're either going to get stopped out or the RSI is going to track and go back up above 70. So let's go step by step again. Well, lo and behold, the RSI went back up above 70, but we keep our stop there and we continue to track it. It's still above 70 and the stock is going higher. This is good news for us. We keep our stop at the same place until finally the RSI starts to go lower and then closes once again below 70. Once it does that, that's our signal to move our stop up just below that bar. So do you see how we've been tracking this trade? Now remember, this only works if you have a really nice volatile trending move. So what we suggest usually is for our students to trade multiple lots. And so you can exit half of your position at the basic exit or a standard exit, and then you can let the other one use this technique. So we've closed below 70 for the second time. We've moved our stop up just below this bar, and we continue to track. And now the RSI is once again above 70. And even if it just goes above 70, as we look down at the RSI once again, it just went above 70 for one bar and then right back below it. That's still a valid signal to move our stop just below this bar now. Anytime the RSI is above 70 and then closes below on the next bar, that's your signal to move your stop just below that corresponding bar. And then, as you can see, we exited. All right, now here was our initial exit right here, roughly around 49.5, 49, and then we squeezed an extra 2 or 3 points by using this technique. Now, if we look at the other example where we were going short in Triple L, we see that we would have gone short here, and this time we have the same parameters for the RSI, but now we're tracking the RSI below the lower threshold, where before we wanted to see when it was trading above 70, now we're looking to see when it's trading below 30. So we monitor the RSI, and the first time it closes back up above 30, we find the corresponding bar and move our stop just above. Now this is a more expensive stock. This is a $120 stock, so you might want to give yourself a little bit more room. All right, so that's where we're going to place our stop. We're either going to be stopped out on the next couple of bars, or the RSI is going to go below 30 again. So let's track it, and lo and behold, we went back down below 30 and bounced back up above 30. So now we move our stop from this bar down to here. Not a big shift, but that's still okay. We're still tracking the stock instead of putting our own parameters on where to place our stop. We're letting the stock tell us where to place the stop. All right, so we're either going to get stopped out once again, or the RSI will go back below 30. Well, it still remains above, but we haven't been stopped out yet. Still above, but it's heading lower now, and now it goes below 30. So now we're monitoring it once again. For the first close above 30, we will lower our stop just above the corresponding bar. And there it is on the next bar. So now instead of having our stop here, we move it here. See how simple this is. Now we continue to track the RSI, and lo and behold, once again, it goes back below 30. So we keep our stop in place. It's well below 30, and now we just had all this move to the downside as a really nice assurance that we're on the right side of the market. Still below 30, still below, and now coming closer, and then we close up above. So now we've locked in from here all the way down to the corresponding bar. We've locked in all this profit, roughly about 4 to 6 points, and we got stopped out. So instead of exiting using the standard parameters right here and having a nice 4-point gain, we gained roughly about another 4 or 6 points more by using this simple technique. The one thing we're doing is we are monitoring the 5-period RSI, and we're just tracking it with a corresponding bar that either goes above 70 then closes below, or the corresponding bar in this case that goes below 30 and then closes back above. Remember, these presentations are being recorded, so if you need a little bit more knowledge on how to implement this, simply go to Pro Trader Strategies, ask them for a link to this recording, and you can study this at your leisure. So let's look at some more examples just so that you can kind of get this technique under your belt. But please remember, if you're going to apply this, please paper trade this in the beginning. Many people, their eyes light wide up and they think, boy, this is fantastic, and they use this immediately and then start to lose money. It's because they really don't fully understand the process and how to implement this. All right, here's an older chart, but I want to show you this for a specific reason. Here we have the same RSI plot here, okay, 70 threshold, 30 threshold. Now here's a buy signal that was generated by one of our particular strategies, okay? And normally we would have exited roughly around here, taking a nice 2-point gain, but we're monitoring the RSI. Now here's the first close below 70, so we would have moved our stop here. And then the RSI goes back above 70, and then we close below it again. So then we just move this stop up to here. So look at all this profit we just gained and we just locked in. Now, a couple of bars later, well, we got stopped out. And so people would say, boy, I got stopped out, and look what the stock did. It immediately stopped me out and then went right back up. Well, this is just pretty much just greed, because you gained an extra 4 or 5 more points by using this technique. And oftentimes, if you watch it for a while, you'll see that it really got you out at the most opportune of times, because even though the next couple of days went a little bit higher, ultimately the stock went lower, and looking back in hindsight, you're glad that you would have gotten out at that point. Let's look at something more current. This was a current signal in EA. Once again, an actual signal by one of our strategies generated in June coming into this month in the last few days. And in fact, I think I took this snapshot going up until yesterday. All right, we have the 5-period RSI here. Once it goes above 70, that's where we start to track it. And we're just simply waiting for the first time it closes below 70, which is right here. So that's where you move your stop. All right, you're either going to get stopped out, or the RSI will go back above 70, which it did. It went up for 1 bar, closed below, so we move our stop up again. Then the RSI went back up above, closed below, we move our stop up again. RSI continue to go up higher, we're not stopped out yet, and then close below 70, we move our stop up. So we're locking in gains here. We haven't been stopped out yet. It continued up until this week above, and then just a few days ago closed below 70, so we exited. So instead of taking a couple of points here and exiting, back in June, we locked in roughly a good 10 more points by using this technique. Once again, our suggestion to traders is to trade multiple lots with this technique. So we're not saying that every trade is going to have these tremendous trends such as you're seeing right here. So the best way to do this is to use the standard exit, whatever strategy you're trading. Use a standard exit, exit a portion of your position, and then once you've exited a portion, move your stop to unchanged on the remaining portion. All right, you're either going to get stopped out unchanged on the second half, or you can apply this technique and lock in some more points on the remaining portion of your position. Now that was a recent signal in EA. Here's a recent signal in CVX. As we see here, this was a shorting signal. Once again, an actual signal generated by one of our strategies. But now we're going to follow the RSI as it goes below 30. As we see here, we traded below 30 and then bounced back up very sharply. So this is where we have our first stop initiated right here. All right. The RSI went back below 30 and then closed above it. So now we move our stop down to this level. The RSI once again went back below 30, remained below it for a long time. That means we're locking in profits, and then closed above, so we move our stop down here. So we've locked in a good 5-6 points. Then the RSI goes back below 30, closes up again. We lock in another half point or so, and this was just a couple of weeks ago. And then ultimately we got stopped out. Okay, so this was happening just a week or so ago. Now, one of the best things about this is a lot of traders like to use this for their investments. A long times, you're in a position for a long time and you want to capture these really nice gains you may have if you're looking at monthly charts for an investment. We're not looking at weekly or daily bars. We're looking at monthly long-term bars. You can use the same concept. Nothing has to change. You use the same parameters of 70 and 30 and the 5-period RSI. And as you can see here, if you're long Halliburton on a monthly chart, you simply move your stop up every time it closes below 30. Once the RSI goes back above, you're locking in more gains. It closes below, you move your stop up, and the RSI goes back up above and closes below. You lock in more gains, and then many times, not promised and not guaranteed, but many times you'll see that you've really locked in some nice gains and gotten out of the position once you're stopped out before it heads the opposite direction. All right, so that was stocks. How about intraday trading? Well, here's a 3,000 tick bar chart of the E-mini. This was just a few weeks ago. As we can see here, these are two actual selling signals, intraday sell signals generated by one of our strategies. All right, as we see here, the very first strategy would have gone short on this bar, and by locking in the RSI, we see here that this is the corresponding bar where we locked in the gains. All right. So we're out of the market. We had a nice, I'd say a good 5 points that we made in the first a couple of hours of the day. Then another signal is generated. So we go short and we continue to monitor. And then ultimately we get stopped out, and look how the market changes directions now. Now, that was a 3,000 tick bar chart of the E-mini. We can also apply this to currency pairs. Here's the Swiss franc. When the Swiss franc had a bunch of news come out and the currency pair dropped significantly, and then all of a sudden it went stair-stepped all the way back. Here was a buy signal you could have taken. All you had to do is monitor the RSI the exact same way and continue to raise your stop each and every time that the RSI closed below 70. Ultimately, you would have been stopped out, locked in some very nice profits here, and the trend to the upside dissipated after that. So let's recap before we go into a little bit more here and showing you how to trade with this particular technique. We just shared with you a technique I learned some 30 years ago on how to squeeze more profits. Once again, this is best used, in our opinion, as a suggestion if you want to trade it with multiple lots. So in other words, rather than just hoping and praying that you're going to get a really nice trend, maybe you won't get a trend in whatever position you have, and you'll miss out on, you'll be stopped out with a loss. So the best way, in our opinion, is simply to have multiple lots. Exit at your standard exit point. Then on the remaining portion of your position, move it to your stop to unchanged, so that if it doesn't go any higher, at least you don't lose anything. But if it does decide to go higher, use this technique to capture those large profits and squeeze some more profits out of this. The way to do that is by applying the 5-period RSI. Once again, it's a standard indicator you see on just about any charting software package. It's usually set and defaulted at 14. What you want to do is just change that to read 5. If you don't know how to do that, contact your tech support and they will do it for you. Very simple process. All right. Now, the main question we get with people and new students is that, they say, Steve, I love these techniques for the different presentations you give on a weekly basis, advanced entries, advanced exits, advanced stop placements, different techniques. But you know what? I haven't been trading long enough. I don't even have a strategy to apply these techniques to, or else the strategies I've been using are just terrible. Somebody sold me some $10,000 product and it doesn't make any money, and so I don't even use it anymore. So I love your techniques, but I don't have anything to apply them to. Well, that's the main question we get. What if you don't have a trading strategy to apply these techniques to? Well, this is what I want to share with you today. We want to talk about probably our most consistent as well as popular package we have for trading at Specialist Trading and Pro Trader Strategies. That's what we call our Dynamic Duo package. So what exactly is this Dynamic Duo? Well, it's one of our best strategies, which is strategy number 4. In fact, many of the signals I just shared with you on those past setups were using strategy number 4. And then we use it in conjunction with our most popular trend identifying tool. That's the PET-D. Okay, so let me show you how this works. Let's talk about strategy number 4 first. Let's talk about some of the highlights of this particular strategy. So I learned this once again on the floor about 38 years ago. This strategy is basically for all traders, from beginners to advanced. So it's not as if you need to be trading 30 years in order to use it. We have traders who have been trading 30 minutes that start using strategy number 4 and are on their road to becoming consistent. We also have hedge fund managers that trade strategy number 4. So everyone, regardless of your expertise, gets the same format, the same rules. It's not something that you need to have a good amount of experience before you can apply this, okay? It's basically designed for traders looking to catch quick momentum moves. So we give you standard formatted exit points. But we also share with you techniques such as I shared with you today on how to extend your gains in the course. So you don't have to just get in and out quickly if you don't want to. You can stay in a lot longer using this technique and many other techniques in the course. Now, its intensity level from 1 to 3 is a 2. That means if the most intense strategy where you had to be planted in front of your computer was a 1, and the least intense, where the most relaxed, was a 3, where you could just enter a trade and walk away, this is right in the middle. It's a very relaxed, moderate level 2. It only uses one indicator. There's only one indicator that needs to be applied to this. So it's extremely simple. It's not all this convoluted logic. It's not a system. We don't trade or even believe in systems at specialist trading. The only thing we use are strategies, because strategies a lot about 25% room for discretion. Remember, we want you to become a part of the process, and that's why we don't teach systems, because that means you're taking yourself out of the process. You have to rely on the same rules each and every time with no input. We want you to have some input, so these are all strategies that can be traded differently by different traders. This strategy, the best thing about this strategy is that it transfers easily onto any time frame, any direction, and any market. So in other words, if you trade stocks as well as futures, you don't have to buy two separate strategy number 4 products. You can use the same technique in the same basic format. Same thing with currency pairs. If you become a member of our course, you also receive automatic signal identifiers. These are little up and down green and red arrows that identify when a setup is generated. But please remember, we do not want to rely on these to tell us what to buy or sell, because once again, if you do, you're just turning this into a system. You're buying or selling something based off a red or green arrow, and we don't want that. We want you to ultimately learn how to recognize these. So these are just learning tools so that you'll know what to look for, and then eventually you won't even have to use them. You'll know exactly when a setup has been generated. Our edge here is consistency. We're not going to promise or guarantee that every setup works. In fact, I'm going to show you some that have lost, but the beauty of strategy number 4 is its resiliency. It has a really strong tendency to bounce back. So even if you have a losing trade, many times in the next 2 or 3 trades, you'll make it all back. Once again, not guaranteed, but it is a very, very good strategy that has a lot of resiliency to it. So we're trying to teach and instill in our members consistency. We're not promising home runs. We're not saying you're going to beat the market and make thousands and thousands of percentage points the way so many other presenters do or websites do. We're just trying to instill knowledge in you that has stood the test of time. So that's basically strategy number 4. It has a very, very high level of consistency if you just apply it by itself. But we've noticed, mainly through our members and through our own application, that when you apply the PET-D, which is our proprietary trend identifying tool, you really ramp up your odds for success significantly. So if you see here, the PET-D is simply a color bar algorithm. We keep it in-house. We don't divulge the rules, but all it does is it just simply colors your bars either green or red, regardless of time frame. So if you have a series of green bars, it's telling you the short-term trend is up. If you have a series of red bars, the short-term trend is down. It's a fantastic tool that has helped so many of our traders. I use it on a consistent daily basis. It's a proprietary formula, but it's very simple to apply. Now here's how we implement it with our strategy number 4, and this is where we come up with our dynamic duo, because when we couple these two together, we really increase our odds for success. Here's the way you use it. If strategy number 4 generates a buy signal, the PET-D must color that bar green. If you see these two, you have a very high probability setup. Conversely, if strategy number 4 generates a sell signal, well, before getting into the trade, the PET-D must color that bar red. If it is colored red, you have a very high probability sell setup. All right, that's how simple it is. So let me show you some recent dynamic duo examples and show you all of the different qualities it has and all the advantages to using this. All right, here's MNST. As you can see here, we are initially falling out of bed. We're kind of selling off here. And on this bar right here where we closed higher, this was just a few weeks ago on the 6th of July, strategy number 4 generated a buy signal, as you see with the green arrow. Now, normally, if you're just a strategy number 4 course member, you would take that, but sometimes sometimes there are some small losses. So how do you gain this confidence to take this trade? After all, the stock has been going lower. Well, we simply apply the PET-D. Remember, the PET-D colors the bars. If we get a buy signal, as we saw here on the 6th, that bar should be colored green. We apply the PET-D and we see that not only did it color that bar green, but all the bars have been green, telling us that we've been in an uptrend even during this sell-off. So that gives you the confidence to take the trade, and look what happened within the following weeks. All the way up until last week, the stock basically went, you would have gone in roughly at 135 and could have gained an extra 13 points. And you could have used this technique that I shared with you today on staying in this trade. Here's another example of another trade that was generated on the 9th, just a few weeks ago, to go short though, in EOG. All right. The stock is basically just going sideways. There wasn't really any clear indication of a downtrend. We're just kind of basically treading water, but a sell signal nonetheless was generated. How can we have the confidence to take this? Well, we simply apply the PET D. But remember, sell signals must be colored red to give us that confidence. We apply the PET D, and now we see that all the bars have been red. So we've been in a full-fledged downtrend, even though the stock has been going sideways for the past 2 or 3 weeks. So this gives us the confidence to go short, and look what happens. Okay, the stock goes down roughly around 5 or 6 points in the next couple of weeks. Now, when you get multiple signals, many times you're sitting here thinking, boy, how do I know which signal to take? As in this case, well, there were 2 buy signals generated. The first one actually didn't work out very well, and so we don't know if we want to take the second one. Here's how the dynamic duo really amps up your odds for success. Remember, buy signals must be colored green. If we apply the PET D, we see that the first buy signal was colored red, telling us that most likely this isn't a high probability setup. You should probably not take this trade if you don't want to. So you would have bypassed that, and you still could have been in the trade, but you would have had to sit to 2 or 3 days of downward movement. And we know as traders, we don't like to sit through downward movement. We want to be in the trade. The minute we get in, we want to see it go our way. So you would have bypassed the first signal and taken the second, since the second one was colored green, and look what happened. Stock went roughly up a good 2 or 3 points in the next week. Now, some of the best trades I've often said are the ones you never take. Here was a buy signal generated by strategy number 4. Remember, we said that oftentimes you will get these small losses from time to time. But we've seen by adding the PET D, you cut down those losses significantly because it will tell you in advance whether to take the trade or not. Now, here's a valid buy signal generated by strategy number 4. If we apply the PET D, we see that the buy signal should have been colored green, but it's colored red. So this is a filter telling you not to take the trade, and it's a good idea you didn't because it would have turned into a losing one. So once again, we show you not only winning trades, but losing trades and ways to stay out of them if you can. Now, remember the first example of showing you this technique for extending your gains today. I showed you a couple of examples. One was ADM, as we see here. Now, this was the technique we used earlier. Now, here was the buy signal. And as you see, if we apply the PET D, the buy signal was colored green. So this would have been a perfect example to apply the PET D to know whether to take this trade. Then you could have applied the technique I shared with you today for extending your gains. Great way to be in a trade a lot longer and have the confidence to actually take the signal. Same thing with the other example I share with you, Triple L. We had a sell signal generated, and you could have locked in a lot of this movement to the downside. But how do we know whether we should take this signal? Well, sell signals should be colored red. If we apply the PET D, we see that that particular bar was red, giving us the confidence to take the trade. We can apply this to ETFs as well. Here's a GLD, the ETF for gold. This was in the beginning of the year. A buy signal was generated. Now the stock is pretty much oscillating back and forth. How do you know whether you should take this trade? Well, no one ever is guaranteed, the success of a trade, but we can put the odds in our favor by applying the PET D. The PET D colored the buy signal green, so at least you had a little bit more higher probability that this was going to go higher, and lo and behold, it sure did. That was on GLD. We can also apply this to commodities. Here's a recent signal using strategy number 4 to go short soybeans. As we can see, the sell signal was colored red, giving us the confidence to take it. And we can not only use this on wheats and on ETFs, we can also use this on heating oil. 2 buy signals generated recently to go long heating oil. Both were colored green and both worked out very nicely. Here's a 60-minute chart, a recent chart of the E-mini. 2 signals, one was a sell, one was a buy. Each was in tune or in sync with the PET D, and each one had a nice significant gain. Remember, sell signals need to be colored red, buy signals need to be colored green in order to give you that confidence to take them. These are all strategy number 4 setups. Here's a 10-minute chart of the E-mini recently to go long. All right, this is right off the beginning of the day, a buy signal and a 10-minute chart. It colored the bar green, the PET D colored the bar green, and look what happened for just about the remainder of the day. Now, just to show you that we're not cherry picking and picking the best examples, let me show you what happened this morning in the first hour of trading. This is on a 3,000 tick bar chart, okay? Now, prior to the sell-off that occurred just before I started this presentation, the market really was doing not much. It kind of opened higher, sold off a little bit, and roughly at around 7:10, 7:15 Pacific time this morning, in the first hour of trading, a buy signal was generated using strategy number 4. But how do we have the confidence to take this? I mean, how do we know it's going to go higher? I mean, the market has been heading lower. How do we know it's just going to be a shakeout and we're going to head much lower? Well, we use the PET-D. The PET-D colored this bar green. In fact, it was the first bar in a series of red bars that was green. So now we have the confidence to go long. And even though it wasn't a significant trade, we just went up around 3 or 4 points in the next half hour. You could have used the technique I shared with you today to get out, or you could have taken the standard 1 or 2 point gain and then gotten out of this trade. But this happened just a few hours ago before the market sold off. We can apply this to British pound, to currency pairs. A buy signal that was generated in May to go long went straight up after strategy number 4 generated a buy signal along with our dynamic duo in place. And we can apply it to different time frames. Here's a weekly chart of the Australian dollar. The Australian dollar continues to go lower and lower all the time. Going back to last year, we have been generating sell signals with strategy number 4, and they have been confirmed with the PET-D because the PET-D colors them red. Remember, the beauty of our dynamic duo is that it works in any market, in any time frame, and in any direction. So you have this consistency with whatever market or direction or time frame you want to trade. So here's what we're offering to all our attendees today. Here's our attendee discount special. We're giving you our dynamic duo at a discount. This is Primo strategy number 4 along with the PET-D tool. You get instant course access, detailed instruction. This includes our signal alerts as well as 4 PET-D trading techniques. These are not actual strategies, but they're techniques for entry. And this also includes the add-on. So you automatically will see the buy and sell signals generated as well as have your bars colored. But let me share with something, just a few more things before we go into questions and answers about also how resilient and how consistent this is. Because we didn't talk about news. This happened a while ago. This was a few months ago. But there was breaking news in Time Warner. It says Charter buys Time Warner Cable in an estimated $55 billion deal. Okay, great news that came out on the 26th of May. The shares rose 8% overnight. So as we look at the chart here, here's when the news came out, and you can see that Charter was going, or I should say Time Warner Cable was going higher, and then when the news came out, it really gapped up much, much higher, and it went up to roughly $185, okay? Now, as a member of our Dynamic Duo course, you are also supplied with email alerts. These are just for educational purposes only. But if we look here at this email alert that was issued on the 15th of May, we see here that we had a buy signal generated using strategy number 4 in Time Warner Cable. So strategy number 4 generated a signal weeks before that news announcement came out. In fact, if you look back, nothing was happening in the stock. It was basically going sideways. But let's just say, it's a $155 stock. Let's say you still don't have the confidence to take this trade or maybe even purchase options. How could we have the confidence to know that this is a high probability trade? Well, we apply the PET-D. For buy signals, the PET-D must color that bar green. So if we apply the PET-D, we see here that there was a series of red bars. The very first green bar was on the same day that strategy number 4, which entirely different parameters, generated a buy signal. So you could have been long well before the news announcement came out, because we take all of our information coming from the market itself. We don't care about news. We don't complicate our trading by looking at tons of indicators and tons of convoluted logic. We just simply follow things that have stood the test of time that I've been using for over 30 years. And as you can see, strategy 4, along with the PET-D, our dynamic duo, had a 30-point gain in just 7 days. Now we realize that this is an expensive stock. We have a number of traders who like to use the PET-D and strategy number 4, our dynamic duo, with options. But for those of you who are interested in smaller price stocks, well, let me show you something, an email alert that happened on just a few weeks ago on the 2nd of July. This was in TSO. Strategy number 4 generated a buy signal. All right, so if we look here, here was the buy signal that was generated. Now, once again, you're looking at this saying, like, how can a buy signal be generated? The stock is doing nothing. It's going sideways to lower. How do I have the confidence to take this trade? Well, you just apply the PET-D, and you see that the bar is green. So even though it's not a guarantee, even though we don't promise you that they all work, you've just increased your odds for success tremendously by applying this. All right, so you could have taken the trade there and roughly had a 10-point gain in the next couple of days, or a couple of weeks, I should say. But this is the beauty of our dynamic duo. You can apply this to stocks, you can apply this in the face of news, and it works in any market and any time frame. So once again, we're discounting this today for all of our attendees today. Usually our sister site, which is Pro Trader Strategies, will market this for close to $3,200. That's how popular and that's how powerful this is. We're discounting this down to $24.95, and in addition, we realize that that may be too large of a sum for you to come up with in one payment. We're also adding payment plans. So if you'd like to just put down a deposit with Pro Trader Strategies, you can be up and running and have instant course access. Remember, this comes with the automatic signal alerts. This includes both add-ons so that you can have the buy and sell arrows as well as have the paint bars colored green or red. This also comes with all the rules: buy, entry, sell, the stop placement, money management, different ways for trading aggressively as well as conservatively, and this comes with lifetime correspondence. So if you have a question, anything, doesn't matter if it's the first week in your membership or if it doesn't matter if it's a year later, you can always contact me with any questions that you may have. So here's how to get that deal that's only going to be lasting for the next couple of days, that discount down to $24.95 with the payment plans. Contact Pro Trader Strategies by either emailing them at trading@protraderstrategies.com, or you can call them directly, set up a payment plan with one of their trading consultants at 310-598-6677. Now, if you're ready to get instant access and become a member right away and take advantage of that deep discount, you can use the link below. You see there at the very bottom of this screen, but that's not a live link. You would have to copy and paste that onto your browser. And if we open up the GoToWebinar page on the right, I believe in the chat box, let me just open up that. Yeah, on the chat box, they have actually posted a live link there at the very bottom there. So all you would have to do is simply click that on, and that will automatically take you to the sign-up page, and you can take advantage of that deep discount for our Dynamic Duo package. Now, I'm going to leave all this information up here for you, so if you're interested, you can copy it down. But remember, in order to take advantage of this discount, as well as the payment plans, you have to act within the next couple of days, or it goes back to the $3,200 price, okay? All right, let's take some questions now. And once again, thank you for holding off on any questions. I'll try to answer them in the order they were. A couple of people are saying they had difficulty in the beginning. Remember, this has been recorded, so if you missed the beginning or if you weren't hearing everything properly, just contact Pro Trader Strategies and they can furnish you with a link to this recording, okay? Robin asked a good question. Exactly what does move stop to unchange mean? That's a good question. All right, so what this means basically is, let's say you bought a stock at 50. Let's say you bought 200 shares. And it goes up to 52. Okay, you bought it at 50, it goes up to 52. What we would suggest using this technique today is to sell half of your position, which is 100 shares, at 52. Let's say that's the standard exit. You just gained 2 points, all right? Now, your stop is your protective stop. That means that's the order that's going to exit you if price goes lower. So what you want to do is place that order at 50. So that means if the stock doesn't go any higher, if you can't apply this exiting technique I just taught you today, and let's say it starts to come down lower, well, if you have this stop order in place where you purchased it at 50, you will exit your trades at 50 if price comes all the way down there. So you didn't lose anything. So you made 2 points on the first 100 shares, and you broke even at 50 on the remaining 100 shares. Okay? Does that make sense? That's basically what an unchanged stop means. Let's see, how to set up the 5-period RSI and Yahoo Finance interactive charts. You know, Venkar, I'm not really sure. I know there is another website. We do not, you know, we're not affiliated with Yahoo Finance, but there are some other free charting services out there. If you just do a Google search, I know there's a website called freestockcharts.com, where you can, you don't have to pay for anything, and they have the RSI where you can configure to 5 periods. So there's lots of different ways. You don't have to use Yahoo Finance charts. You can simply use freestockcharts.com or other free charts. Just do a Google search, okay? Anant asking, when does the color bar show up on the bar? At the opening of the bar or when it closes? Very good question. He's talking about the PET-D color bar algorithm. The minute a bar opens, let's say you're looking at a 5-minute bar, the minute the bar opens, because of the way we programmed it, our proprietary programming, it automatically configures whether that bar should be green or red. So in other words, you don't have to wait. And it will stay either at green or red until the bar closes. Now, many times while that bar is still open, it will change from green to red because the bar hasn't closed yet. In other words, the 5 minutes has not concluded. But oftentimes it pretty much stays that same color. And once the bar has closed, it does not repaint itself. A lot of people, some indicators do that. Well, they'll go back and reconfigure with future information. The PET-D does not work that way. Once it closes at that color, it stays that color. It never will recolor itself. So you don't have to worry about that, about it being changed in the future. And you go back and look and say, boy, this color of the bar used to be red, now it changed to green. That kind of messes up my whole setup. It won't do that. So the minute a bar opens, it's always going to be a color. It never is a blank color. It's always going to be either green or red, okay? Brad asks, Steve, do you use the fast or slow version of the PET-D in these examples? Hi, Brad. There are two versions of the PET-D. You can use either one. And we go into detail a little bit more in the course. Mainly, we say that most of our beginning members should just use the standard PET-D. It's been labeled the fast, but it's really just your standard version. The only reason we gave you a slower version is just for people to experiment with. Remember, we have some traders who like to trade more conservatively, some like to trade more aggressively, so we gave them that option, another one. This is all included in the course. So we explain how to implement them, but we would just say use the standard fast version, okay? Patrick asks, how well does it work with intraday trading? Well, all I can speak for is myself and for what our students have told us, and it works amazingly well. The intraday setups I just showed you, I showed you a couple of 3,000 tick bar charts, a 10-minute chart. It works fine. It works fantastic. I use it almost exclusively intraday trading the E-mini, the dynamic duo. So this is what I've been using most recently because my schedule, I'm giving webinars and I don't really have time to look at anything other than shorter time frames. And it works great. Once again, these are the same things I was taught over 30 years ago. Strategy number 4 as well as the PET-D. We didn't have the color bar algorithm then for the PET-D because we had to use the calculation by hand. But nothing has changed. We haven't altered anything other than maybe give you a slower version of the PET-D. But other than that, everything is exactly the same that traders on the floor were using some 38 years ago. Okay. Brad asks, have you tested this tool ahead of earnings announcements? No, Brad, because once again, in order to test something, if you want to test something, you have to systematize it. In other words, it has to be implemented the exact same way each and every time. All right? What time frame are we going to use to test this? What market are we going to use to test this on? Which direction are we using it? There's just too many variables. Our philosophy is everyone is going to use this and implement this in a different way to meet their needs. Therefore, you can't backtest strategies because there's discretion involved. And by discretion, we don't mean hoping and praying. We mean more of a experience or an insight off of experience. Guess what? I have the 38 years experience of what I teach you what to look for. Okay? And you can apply any of it, all of it, or just a portion of it to give you that insight. But in order to backtest something, you have to make it a system. And we don't believe in systems because that means everyone trades the same way. And in my opinion, in 38 years, I found a no better recipe for disaster than by having everyone trade the same way. That's why we don't believe in chat rooms or trading rooms, because that turns into a crutch where people try to copy one another. I give you the sound information that has stood the test of time and then mold it to your needs so that you feel comfortable with it, so that you can trade it that best suits you. Okay, so nothing is back tested or researched. Let me see a few more questions here before. Let's see. Guess what? I missed your entry. Where your entry was. Well, we didn't really talk so much about the entry. That's in strategy number 4. Strategy number 4 gives all the rules for entries. It's basically the technique for exiting can basically be used on any strategy or a trading method that you currently use. If you want to use this with strategy number 4, our dynamic duo that we really have such favorable response to, that's what we're offering as a promotion today. Now, once again, a lot of people say, well, how well do I know this works? Do a Google search on strategy number 4 on any of our products, Pro Trader Strategy, Specialist Trading, or even myself. And you'll see that there's so many people in message boards that have done very well using these techniques, okay? Let's see, any more questions? I guess I've just about covered it. Robin was asking, so does the unchanged move up so that the next time the RSI drops below 20, it is now below the previous bar where the RSI dropped below 20? Now, unchanged has nothing to do with the RSI. In other words, the RSI is just where you are moving your stop on the remaining portion. A stop order is simply an order that is something that will get you out if price goes all the way back down. So once again, if you bought a stock at 50 and it goes up to 52 and you did not exit, many times the stock will go all the way back down to 48. And you're saying, boy, I had a profit, 2-point profit, now it's down, now I have a 2-point loss. So an unchanged stop means if it comes down to where you entered, at least that order will get you out and you didn't lose anything. You exit at the same point you lost, okay? Brad asks, is there a scanning tool in NinjaTrader with this tool? You can use NinjaTrader, and I believe if you contact the people at Pro Trader Strategies, Brad, they can tell you how to set up a scanning for Strategy 4 and the PET D. Yeah. Let's see. Robin is asking, do you move the stop up to just below 52 for the rest of the shares? Robin, that's now this is getting too complicated. I don't know what you mean by 52. I just picked that as a scenario. I think the best thing to do, Robin, is to watch this video again. Once again, Pro Trader Strategies will send you a link to this video and look at the process again when we talk about moving your stop to unchanged, where that was. And I'm just giving you hypothetical points here, so we're starting to get a little confused. But use this and also contact your broker. He can tell you what a stop order is. He can tell you what an unchanged stop is. He can explain these things to you as well. These are just common practices for trading. Once you become a member of Specialist Trading, we will spend much time explaining this process to you, but it's a little bit too complicated to go into a short, brief presentation. Okay. As we said, all of our presentations are recorded. You can contact Pro Trader Strategies. They will send you a link. But if you really want to take your trading to the next level and you want to take advantage of this discount, I would really, stress, take advantage of this deal in the next couple of days, because then the price goes back up and you may not be able to get your dynamic duo package the way we have for you with a payment plan. So there's a lot of advantages to this, and the year is well over halfway over. If you're not up to the level you thought you would be at the beginning of the year, I really can't stress enough that we've had so many students tell us that for the very first time in years they are consistent in their trading by applying the dynamic duo. That's how popular and that's how powerful this package is. So if you're interested, here is the information once again. Take advantage of it before the price goes back up and we no longer have the payment plans. Remember, we realize that not everyone can come up with one large sum to make that. Don't worry, you can have a payment plan and it can be taken care of for you with just a small deposit. You can be up and running as soon as today, okay? In conclusion, once again, here's the information you need, Pro Trader Strategies. You can email them at trading@protraderstrategies.com. The best thing to do is to call them directly at area code 310-598-6677, and they can set you up with a payment plan for just a small deposit. You can be up and running and have instant access. And if you look at your chat box on the far right, you'll see the live link, and you can simply click that on and take advantage of it. I want to thank you so much in conclusion, and I thank you so much for attending today, and I look forward to all of you becoming students and members of mine at Specialist Trading. Thank you so much. We shall see you next time. Bye-bye.